Finally, I'd like to talk about our favorite type of mispricing opportunities in Korea that are relatively unknown to international investors. We call it a holding company discount. Recently, increasing number of Korean public companies are transforming into a holding company structure by spinning off the business operation, resulting in public listing of both the holding company and its subsidiary. We view this to be a positive development because such transformation increases the transparency of the parent company and also provides an opportunity to invest directly into operating subsidiary. This probably means the operating company or subsidiary deserves a higher multiple. However, it does not mean that holding company should be trading at an unreasonable, excessive discount compared to the value of its equity stake in its publicly listed subsidiary. For some reason, we have noticed that this kind of exorbitant discounts are common in Korean stock market, although such discounts are rather temporary. That is why we think the holding company discounts offer compelling investment opportunities for value investors like us. We also note that many international investors are not familiar with this kind of holding company discount because it's very rare in other financial markets in which both holding company and subsidiary are publicly listed. Now I'm at the end of the first part of our presentation, and I will turn it over to Albert Young, who will discuss the details on our two equity ideas, which are based on the holding company discounts in Korea. Thank you so much for listening.
Thanks, Chen. And this is Albert Young. And the first company I'll introduce is called Pungsan Holdings. Its market cap is about 180 billion Korean won, which is about 165 million US dollars at the exchange rate of 1100 won per dollar. Its stock trades at a price to earnings multiple of 4 and a price to book multiple of 0.3, which is a more meaningful metric for a holding company. Its dividend yield of 4.3% is higher than that of most other Korean companies. Now let me tell you the investment thesis. First, its main subsidiary. The main subsidiary, Pungsan Corporation, is the market leader in copper-based products and also strong in defense business. But the value of Pungsan Corporation is not properly reflected in the price of the holding company, Pungsan Holdings. Second, an arbitrary opportunity. Given the fact that most of the value of Pungsan Holdings is derived from its equity stake in Pungsan Corporation, the stock prices of both companies should move in tandem regardless of the discount. The stock price of Pungsan Holdings has been lagging that of its major subsidiary Pungsan Corporation. We believe this gap in the prices of both companies is likely to be narrowed in the future. Third, attractive valuation. The current market cap is significantly lower than the value of the sum of the parts. This is a classic example of holding subsidiaries discounts opportunities. Let me tell you more about the holding company. The company was founded in 1968 and transformed into holding company structure in 2008. The company is 42.5% owned by Ryu family and is now run by the second generation son. As a holding company, Pungsan Holdings holds stakes in the subsidiaries. Its ownership of its main subsidiary, Pungsan Corporation, is about 33%. Unlike most holding companies, it also has its own operating businesses, which is a type of business of a typical holding company. The company provides technology services and contract manufacturing mostly for its subsidiaries. Technology services account for about 20% and the contract manufacturing for 80%. The table shows only a parent company financials in value. In 2012, the company achieved about 100 billion won of Korean won of sales and 16 billion won of net profit. It spun off its main business in 2008. That is why the sales figure in 2008 is substantially larger than the rest. Also, Korean accounting standards was changed from Korean GAAP to IFRS in 2011. The profit figures after 2011 are smaller than before because they include only dividend income from subsidiaries. This is the case under IFRS. When we derived normalized earnings and we excluded dividend income to calculate the value of only the parent company. The parent company holds some cash and other investments. By adding the value of these to the value of its operation, we value a parent company, excluding its subsidiaries, at about $97 million US. Now let me tell you more about the main subsidiary, Pungsan Corporation. The company is also listed after being spun off from Pungsan Holdings in 2008. The company has two main businesses. First, it is a vertically and horizontally integrated manufacturer of non-ferrous metal, mostly copper-based products. Second, it is engaged in defense business manufacturing ammunition. Its non-ferrous business accounts for about 77% and defense business for the rest, which is increasing. The current market cap at the end of March is about 760 billion Korean won, roughly $690 million US. The stock trades at about 12 times its last year's earnings and 0.8 times its net asset value. Now I'll talk more about its non-ferrous metal business. The non-ferrous metal unit produces a full range of copper products including copper alloy sheets, strips, tubes, and rods. It is the market leader in Korea in many businesses and products, and also a global leader in the coin blank manufacturing. Its business is cyclical because the price of the products fluctuates with the price of the raw material price. As you can see from the graph at the bottom left, the stock price of the company moves together with the price of copper. Its recent performance suffered from copper price decline, but the business stabilized and now has a better outlook because the copper price stabilized and its long-term trend is upwards. Now let me talk about its defense business unit. Its defense unit produces military and sporting ammunition, propellant powder, ammunition parts, and precision forging products, and exports to more than 50 countries, and the export sales are increasing. The stable nature of the growing defense business unit helps to neutralize the cyclical nature of the non-ferrous metal business. This table shows the financials of the company. During the year 2012, the company achieved 2.9 billion Korean won of sales, which is about 2.6 billion US dollars, and 61 billion won of net profit. As you can see from the table, the profits declined substantially recently. As I explained before, the profit decline is mainly due to the copper price decline. But because of the cyclical nature, we assume that its normalized earnings are higher than last year's earnings. And we think the normalized earnings number we used is conservative. We then applied a multiple of 10 to derive an intrinsic value of about 700 million US dollars. The value of Pungsan Holdings' 33.3% share is about 230 million US dollars. When both a holding company and a subsidiary are traded, the value of a subsidiary is often discounted. So we also discounted the value of the subsidiary by 20% when we calculated the value of the holding company. For cyclical business with volatile earnings, using a price-to-book multiple is sometimes more appropriate. If you use a multiple of 0.8, we derive the similar number. As we will show later, the value of Pungsan Corporation, a subsidiary, comprises most of the value of Pungsan Holdings. This means the stock prices of both companies should move similarly regardless of the discount. The graph shows stock prices of two companies. It shows the stock price of Pungsan Holdings has been lagging that of its major subsidiary, and the discount has been widening. We believe this gap is likely to be narrowed in the future. The table shows revenues, profits, and the value of the holding company and its subsidiaries. As I explained before, we discounted the value of Pungsan Corporation by 20%. We also discounted the value of cash by 30%. We added up the total value of each subsidiary and derived the value of the holding company. As you can see from the bottom of the table, the current market cap of about 180 billion won is only 51% of the intrinsic value of Pungsan Holdings. This graph illustrates the same message. The value of the main subsidiary, Pungsan Corporation alone, far exceeds the market cap. And this is just one example. There are many other cheap holding companies in Korea. And also, we have many similar opportunities in other companies holding major subsidiaries.